Please remember that futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I author in my weekly written reports. Prices shown on charts and quote bars are in real time and take into account all known activity up to this point in time. If you'd like to read more of this disclaimer, simply hit the pause key on your computer screen. Welcome, traders. I'm Boyd Baker, and thanks for tuning in to my Futures and Options Update. Today is Thursday, September 10th at about 3 p.m. I want to talk about a market that has really been out of favor for some time. It's one of the softs, and is the sugar market. Many people have been calling recently about sugar because they're seeing a market which has been very, very oversold. You have to go back all the way to 2011 where we saw a contract high of 36 cents. And the market for the better part of 5 years has been trending down. And it looks to me like you're starting to find a bottom here. The front months found a low down around 10 cents. Now we're starting to trade up. We're about 11.30. Now, let's look at the daily chart and give you some ideas as to what we're thinking here. The March sugar looks to me like you put in a head and shoulders bottom. You have a neckline here right around the 11.50 area, a contract low at 11.28. A market which took out this neckline here and is showing signs, at least on a momentum basis, that you could be breaking out of a long-term downtrend. Now, that's the technical reasons. There are some fundamental reasons to go with this. As I understand it, China's production is way down. You're getting a lot of exports out of Thailand. Their exports are up 4 times what they normally export. And also there's some disruptions as far as weather with the Brazilian harvest. So there's some fundamental reasons which are kicking in. Finally, on a longer-term basis, we may be putting a bottom in on the sugar market. I can't give you a specific recommendation, but you can call me here. I'd be happy to discuss some strategies with you. What can I offer to you? What I can offer to you today is a really neat tool. And this is put out by the CME Group. I'm in the CME Group building right now. And as an options trader, when we're buying options or selling options, we often look at implied volatility, the volatility of an option, and it tells you whether or not it's overvalued or undervalued, or how far that option might trade, how volatile it might be. It's an excellent tool because what you can do is you can apply it to any market. You can program in, let's say, sugar. You can go in on the grains, the metals, the meats, the currency markets. Put in and look over the course of several years to give you an idea of what the implied volatility might be. It goes over all the different strike prices and the different option series that you can look at. It's really a neat tool if you're an options trader. Now, if you call in, I'll sign you up for this, and you can put in any market that you want and look at the various option expirations and get an idea of what the implied volatility is. If you'd like a free copy of this, I'll sign you up for it. Simply call me here at 866-973-2079. If you have any questions on the sugar market, I'd be happy to devise a strategy for you.